Hey guys, good evening. Good evening to all of you and welcome in this session of Oliveboard. As you guys are aware that on daily basis we are having a discussion on a very important topic which is always there in the exam. By following the same pattern, today we will talk about one more topic which is audit. But I always say in every session to you that if you actually prepares things on a very serious basis, do follow the super elite plan, uh, and you can join it through the PDY code. If you are new to the session, please don't forget to subscribe the channel, keep liking the session, and let us know that what else we can do for you guys, what is your requirements, what can we provide you. Like if you want to just cover the content in a crisp and a quick manner, in a summarized way, if you want to cover the syllabus, there is a crash batch for you. And if you want to cover the multiple choice questions, the cracker batch is there. A combination of summary content and the multiple choice questions is available for you at the Oliveboard platform in a form of all-in-one batch. You can join it through the PDY code and easily could crack the examination. Now, today let's talk about the bank audit and inspection. Why a bank needs to go for the audit. So, first point is there are two sections, section 29 and section 30. Section 29, all these are of the Banking Regulation Act. This is from Banking Regulation Act. This is also from Banking Regulation Act. These two sections, section 29 tells us that every bank have to prepare its accounts as per given financial reporting framework. And 30 says us financial statement of bank should be audited by duly qualified person. So due to the section 29 and section 30, a bank have to go through the audit procedure. Now when we talk about the bank audit is the definition. If I say, it's an expert analysis of financial statement of banking company, because every bank is a company, especially when we talk about the India. When we do the bank audit, there is an audit called statutory audit. We call it as the once in a year audit or annual audit. That audit is done once in a year. So that statutory audit is to be done by the practicing chartered accountant, and that practicing chartered accountant should be selected from a RBI panel of CA. So every year, Reserve Bank of India creates a panel. Out of that panel, we will select that chartered accountant. If you are a public sector bank or if you are a private bank, for a public sector bank, that appointment of the auditor, the power is with board of directors of the bank. But in case of a private bank, that power goes in the hand of shareholders. Always remember that be it the public sector bank or the private sector bank, the chartered accountant we are appointing, that person have to be selected from the panel which is created by the Reserve Bank of India. We cannot select a auditor at our own requirement, like it as per our own choice. We can't do that. We have to appoint that person based on the RBI panel recommendations. Got it? Now, few things which we also have to remember, because I used a term that a company have to create its account by following a FRF. Now what does it mean by that FRF? If you look at that word, that FRF, what does it mean by that FRF? Three things a auditor will always cross check. First, compliance with Companies Act, section 138 to section 148 is all about audit. When a auditor is appointed, it have to be appointed or removed, or the auditor will do all his tasks as per the instructions given in section 138 to section 148. Second, he will cross check RBI regulations, that it's complied or not. And the third, compliance with accounting standard, that accounting standard are properly followed or not. Always remember that audit is an expert opinion. It is an expert opinion on two things: that financial statement of a particular organization provides true and fair view. What does it mean by true? That whatever written in the accounts of a bank is correct. Fair means the information written in the account is relevant. It should not be a data which is of no use. All the data related to the particular current year should be there. Remember, I used the word opinion. So, this opinion is presented in the format of report. And because it is an opinion, auditor provides assurance, not insurance. Auditor always provides assurance, not insurance. He do not establishes any fact. He is not someone who is giving you the guarantee that after my audit there is no problem in the accounts. Whatever information is available in front of me, as per that I do not find any problem. That I could guarantee you, but I cannot guarantee that there may be some complexity, there may be some unpresented fact, there may be some unpresented data. If there is something which is not presented in front of me in terms of document, how could I verify that? Got it? These are the few important things about the bank audit. Now, majorly there are three types of audits when we talk about a bank audit. So one is concurrent audit. You can say that when we talk about the concurrent audit, you can say that it's a real time audit. You guys are regularly doing that when the task of a one person is automatically tested and checked by the other by the another person in the office. Like if a slip which is generated at one counter, when it is automatically tested at another counter and then the transaction is approved, that procedure is called concurrent audit. Got it? Why normally concurrent audit is done? It is done to test regular transaction. Normally, to check authenticity. That's why concurrent audit is normally done. Then it comes to the internal audit. When we talk about internal audit, few points we have to remember. It is done to test the internal control of the organization, that things in the organization are done in a controlled environment, or is there any probability that due to the lack of the control there is a possibility of fraud and error. There are things which is out of control uh, from the manager's perspective. So to test these things, internal audit is actually done. It is done by the uh, staff of the bank itself. It is done normally by the bank staff. Normally it is done every 3 months or 6 months. That's internal audit. The motive is important, to test the internal control. Internal control related to any risk, any possibility of fraud, any possibility of error. Then it comes to the picture statutory audit. Statutory audit have to be done by following the section 138 to section 148, which we have just talked about. It is once in a year audit. It is called once in a year audit. We call it as a once in a year audit. That's why the focus of the statutory auditor is all about to check the compliances. Compliances related to CRR, compliances related to Basel norms, compliances related to non-performing assets, compliances related to financial reporting framework, which I just told you, especially that format as per the schedule 3rd is followed or not. As per the Companies Act, P&L and the balance sheet have to be prepared by following the schedule 3rd, and the compliance of accounting standard is done or not. When we talk about the statutory auditor, he will give you 3 type of report, or I must say the 3 different audit reports he will give. First, as per the Companies Act. Second, as per the RBI regulation. Third, as per the Income Tax Act. As per the Companies Act, he could give you four types of report based on the financial statements. As per the RBI, these four types of report we will discuss shortly, don't worry. As per the RBI, he will give you a long form audit report, LFAR report, and the date for that is 30 June. Every year that report have to be submitted to RBI before 30th June. As per the income tax of also, he will give you the tax audit report. Normally the date for that is 30th September. Now, when we talk about the statutory audit report and what may be its types, let's talk about the types of that statutory audit report. See, just a second. Before going into that, let's cover one more small important point, that in India, Comptroller and Auditor General of India, we call it as a CAG. It's a government authority. It directly reports to the president in the parliament only. You can call it as the highest audit authority in India for the government departments. That authority actually written a book, Introduction to Indian Government Accounts and Audit, and in that book they defined the audit as an instrument of financial control. They considered it as an instrument of financial control. So that's a fact which we should remember. Then statutory audit, I have already told you that it will test compliances related to loans, advances, priority sector lending is followed or not, CRR, SLR, CRAR, especially NPA. All the rules of the RBI is followed or not. Related to appointment, I have also told you that for the public sector bank and for the private bank. Public sector bank, the power to appoint auditor is with board of director, and for the private it is with the shareholders. In both the cases they will select from the panel of chartered accountants. From that panel they will select the auditors. Now, those four types of audit report as per the Companies Act and standards on auditing. Just like when we have the standards for the accounting purpose, we have the standards for audit purpose also. Now please understand, for example, if I am doing the audit of your bank and after doing the audit I found all good, that there is no problem in your financial statement. If all is good, I will give you a clean report. A clean report in a technical word is called unqualified audit or unqualified audit report. But if during the audit I found all good except small issue, all is good but there is a small issue, there is a very small mistake which is not that much important, I will give you a qualified report. I will say that everything is good except there is a small mistake which can be easily corrected. So I will qualify that mistake item, I will set aside that mistake item, and then all other information in the financial statement I will consider good. Then is another report, adverse report, which says that all is bad, that everything is bad. There is nothing good in the financial statement. There is so many errors, there is so many probabilities of the fraud. Everything is wrong. That is adverse report. Everything is wrong. That's adverse report. Now, what's disclaimer of the opinion? This is denial to do the audit because you have not prepared your financial statements properly. You have not followed the format, you have not complied with the accounting standard. Your financial statements are incomplete. So many transactions are missing, your books are not complete, you have not prepared a profit and loss account. How can I audit an incomplete records? So I am denying to audit. I am saying that because the financial statements are not prepared properly, I am disclaiming the audit. I am denying that I cannot issue a audit report. These type of four reports an auditor can issue based on the situation of the company. I hope that you guys liked the session. I hope that it gave you the opportunity to deep dive in the audit concept and all the possible questions out of this audit concept we have covered. So if you want to follow a systematic approach, you can join me through the super elite plan. Don't forget to subscribe the channel if you are new to the channel so that you can get the timely information, and then uh, that all-in-one batch that give you an excellent insight for the coverage of a summary content and to practice the multiple choice questions in a systematic way. You can join me through the all-in-one batch also. So keep liking the sessions, do subscribe the channel, and we'll meet in the next session. Till then, have a great evening. Bye bye. Keep following these sessions regularly. Don't skip anyone because we are covering the most important topics on a daily basis. Thank you guys. Thank you very much. Bye bye.